Hello and welcome to another update video about Ethereum. Ether shows a first reaction to the target area we've talked about in the last video and late yesterday. So we'll see if this is maybe now finally the start of the wave 4. I will explain what we need to see to confirm that and which support levels need to hold, because I did update them, and want to talk about the overall structure. So obviously see a bit of a pullback there, a bit of a red candle. I would just try to highlight that it's not the time to panic. I know when there are so many green candles for a few days, it's always easy to start to panic. But I mean, it's landed pretty much in the middle of this target area there that we discussed already yesterday, between 2,800 and 2,906. It's already quite a really wild extension in this third wave that we've talked about. And not unusual, however, to get these extensions in third waves in the crypto market, okay? Especially when it's only a diagonal pattern, that's what I have to assume. But even for a diagonal, it's not necessarily unusual to see extensions in the region around the 2.382 Fibonacci extension of the wave 1. So it's not uncommon, okay? It's pretty wild, but we're in a bullish market. So obviously, I have shown you this ascending trend line that could offer some support along the way if we get finally this wave 4 pullback. So that might point towards round about maybe 2,600, $2,550. Then also we've got the Fibonacci support levels in case the wave 4 is starting now. It's a bit too early to confirm that. I'm going to zoom in a minute, but the idea is that to really get a complete 5-wave pattern, we need another 4-5 in the chart. At the moment, I only see 3 waves up from the 23rd of January low. So there is more work to do to the upside to confirm a bullish outlook. I mean, it is bullish, okay? But you know, at this stage, it can still fail after 3 waves. So that might indicate that we are coming down in a C wave. But I really don't want to focus on that until we even come close to the support area, or even close to a level like 2,532 and 2,460. So the ideal target, should the wave 4 start from here, and I'm not telling you it is starting, because the red candle we've just seen is not enough yet. But should a wave 4 start, the ideal pullback target would be the $2,605 level. It's the 38.2 retracement is typically the ideal target for a 4th wave. The 50% Fib level would also be okay at 2,532. And then, well, below the 50% Fib level, however, even though the diagonal is easily still valid to the golden ratio level, that would be quite deep for a wave 4, and I would not trust it anymore. So already below the 50% Fib level, I think we have to get skeptical about the continuation to the upside in the yellow count. So what I'm leaning towards is the yellow count, as I said, but I cannot confirm yet that the 4th wave pullback has started. So I continue to lean bullish as long as we are holding the yellow support zone. Only a break below 2,532 will increase the probabilities for the white C wave down. That would, however, also be within a bullish scenario. All right, so it would not be bearish. We would just break the microstructure, but the overall uptrend and the fact that we're in a bullish market would not change. So then let's take a look at the detailed count. There isn't much going on. We've seen a little bit of a red candle. So far, it's being bought up still. And I think this last move up, it would look better with maybe even one more high. Yeah, with one more high. But I mean, zooming out, you see already we have 5 waves up there from the Tuesday low. It would still look better with one more high, because then this nano 5 would also have one more high maybe. Then obviously, what do we need to see as initial evidence that a low is in? Well, I would like to see at least a break below 2,763. This is the initial swing low, the next swing low, or let's say the previous swing low. If that breaks, it could send us down in a wave 4. It would be an ABC structure. I'm not going to put any labels on here yet until I see first indication that actually we have topped, that we have a top of sorts in place, because all I see at the moment, we only see 2 mini red candles on the 30-minute chart. So it hasn't even made a lower low or a lower high. Okay, so it's still pushing higher. You might want to use a trend line maybe as initial indication, very earliest indication that a low is in. Sorry, a top is in, not a low. That gives you an earlier signal than breaking below 2,762, but it really is a super early signal, and I'm not sure how reliable it is. Trend lines are to a degree subjective, but taking out a previous swing low, I mean, that's a better signal as such. But yeah, that's sort of what I'm watching now. And again, we have more upside levels to watch in case the market decides to go higher. And then we talk about 2,893 to 2,906 next. So yeah, just a quick update, just a quick middle of the day update. So I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.